Hello, my name is David Ray. I'm the CEO of Dundee Precious Metals, here today in Colorado Springs, taking advantage of the opportunity to talk to a number of our investors and shareholders.
And enjoy the sunshine.
And enjoying the sunshine.
Right. Dave, good to have you here. Good to see you in person. We've not met in person before, so that's a nice treat for me. Right, like you mentioned, we're at this conference. Some of the big hitters are here. What are you doing here? What do you want out of it?
So the main thing is to have an opportunity to update and talk in more detail about, what's driving Dundee Precious Metals and the value that we're aiming to create and where we want to be a year and 5 years from now.
Right, so that storytelling is anything you want from people here that are here?
So here I think it's a good opportunity for us to calibrate our understanding of what our shareholders and investors are looking for.
Right.
Also consider opportunities. It's, creating cash flow is more than just realizing that through the generation of our organic growth projects. It's also looking to see what else we might be able to do with other organizations while we're here.
Right, okay. So it's been and we'll kind of come on to that at the end there. It's been a good year for you, share price appreciation-wise. So I think most people have struggled in a market like this, but you are throwing out cash, you are producing the answers. So maybe kind of give us the highlights of the kind of Q2 numbers, give us a sense of where you're at, real new to the story.
Sure. I think the key number that people are paying attention to here rather than Q2 is the first half, where we've had a consistent free cash flow generation, so $135 million year to date based on our production and our low operating costs. If we look year on year, we're $211 million, and we're set to end the year on the rate that we've been running so far. So it's been an exceptional performance this year with our operating assets steady, consistent, generating that free cash flow, building our inventory of cash. And it's given us an opportunity for us to rethink some of our return of cash to shareholders. So we've been carrying on with a consistent dividend, but we've also increased our share buyback this year.
Okay, well, let's look at some of the things that enable that, which is obviously the operations on the ground. There's always room for improvement. So without talking about the organic components, where's the improvement going to come from with the current producing assets?
We're consistently aiming to improve what we do at Chelopech, but as a core asset, it's just an exceptional performer. So it's been able to meet all of its target criteria. We're now moving and realizing opportunities to move from sort of 7-day week mining to 5-day week mining and this type of thing. We're looking at increased efficiencies, which have been driven by inflationary pressures that we've had in prior years and this type of thing. In terms of Tepe, it's just had an outstanding year this year. So, costs in the mid $400 per ounce all-in range, and it's hit all of its performance expectations.
That is exceptional. Now, I was speaking to another CEO, Australian CEO. He reckons for those guys, 30% increase on the costs, the cost line, is the new normal for them.
Right.
For you guys, what have you seen? I know we've come off of a big inflationary environment. It's sort of getting under control. But what are you seeing in country?
So basically we had power costs flowing through to everything. So major consumables, steels, reagents, looking at also translating through into salaries to offset cost of living increase and this type of thing. I think it's fair to say that 25-30% increase was what we saw initially. But having said that, already for this year, in terms of the contracts we put in place for the rest of this year and next year, we're seeing 5% reductions in these. Major component being energy. We're actually running below the subsidy level as the Bulgarian government has, I think, very proactively put in place. So we've seen an unloading of some of these drivers. I think we have to recognize we're in mid-year, summer, not quite the sort of the situation we can expect all year. But so far for us, we've been through that peak. 30% was probably a good number, and we've seen that starting to come up.
Right. Now, what are you doing in terms of protecting those margins? Because obviously the costs have come up, even if they're coming off a bit. Gold prices kind of holding steady at the moment, around sort of 1925 mark. For you, in terms of making sure that margin increases, grows, how do you do that? Is that through the organic growth or?
Well, I think for future, yes, but there's some near-term things that we can do. So we've taken advantage of a few things that we brought in during COVID, which have allowed us increased productivity and efficiency underground. We're doing things where we're investing in the ability to increase productivities going forward. And then in terms of our assets, we've got, fortunately for us, 2 assets which we're looking at low cost into the future. So it's not quite Tepe low cost, but it's still along the same sort of numbers that we're talking about from Chelopech and Tepe at the moment.
Right, okay. And in terms of in-country activity, what else is happening in terms of helping the bottom line?
Well, I suppose helping the bottom line, that's largely around taking advantage of price and cost. But in terms of what else we can do, so, we've been taking the time to look at our opportunities. We've invested quite a bit differently this year in terms of exploration to what we did in prior years. And, looking at what can we do around our existing assets. So with Chelopech, we've been investing more in terms of exploration on Sveta Petka and Brevene, which are around the existing asset. Penalty to that in the short term is it's not allowing us to increase the life of mine as much as we might have the opportunity. But as we develop those, it's going to give us an opportunity to push beyond 10 years with Chelopech. In terms of Ada Tepe, it's really around making sure that we're fully utilizing the opportunity of that asset, very small asset, high grade, investing small amounts in terms of increasing understanding of how we can bring those in with efficiencies. We're seeing recoveries move up. At the same time, we're seeing costs basically level, and we're coming into a period where we're moving towards the end of life of mine though. So making sure we're investing wisely in what we need between now and...
Exactly. And I think the market's saying to you, if you look at the share price, it trusts you. But have you had to rethink about some of the things that you planned at the beginning of the year versus today, given the backdrop of a very difficult market for precious metal for the last 3 years?
Now,
how are you approaching that?
Well, I think mostly for us, we're fortunate that the cost that we have more flexibility than many might. Plus, we've got a cash balance that allows us to think through and deliver and not be worried about the next week versus the next month.
Yeah.
But having said that, we have been disciplined. So if we have a look at what's changed for us in all of this, we've been rethinking some of the work around our Ecuadorian assets. So we've invested another 10,000 meters in terms of exploration at Tierras Coloradas, something that we think will come through with the first results starting in Q4. But a huge amount of effort and increased our budget by 30,000 meters above the 40,000 we already had planned in Serbia. That's helping us to bring the resource in at the end of the year. We're investing in electric fleet, which we're anticipating should be coming in the next quarter. And we're looking at that for future assets, how we can truly optimize hybrid versus straight diesel and electric fleet. So there's a lot that's going on at the moment where we're thinking about, where are we 5 years, 10 years from now?
Right. And it's an interesting point about fleets and, autonomous and electric fleets. Is that, what's the arbitrage there? Because obviously, big upfront costs. Yes, it kind of ticks a bunch of ESG boxes. Is it more efficient in terms of per dollar spend?
So you asked me about what we do in country around our existing assets. So what we do is we bet on the ability of our people to really understand that. So we did a lot of modeling.
Yeah.
And what does it mean? Yes, there's a big increase, sort of 300%, difference in terms of a diesel loader versus an electric loader. And on top of that, you still got the infrastructure underground. You've got to have the charging bays. You've got to have the electric infrastructure in order to sort all of that lot. So there's quite a bit to it. But what we've done is we've brought those piece of equipment in, so a truck, a loader, and we've got the very first electric production drill in Europe, actually.
Okay.
So what we're doing with those is putting them together with our team to figure out, okay, what can we really do? Because our ideas are limited by what we're thinking about with a conventional fleet.
Yeah.
So starting to create that, okay, what else can we do? So at this point, we're already seeing it as break-even, higher upfront cost. You get that back in terms of maintenance and other requirements, and of course, diesel and this type of thing.
Yeah.
But I believe there's more there. And that's why we're now putting the money behind our operating team to really fully understand that value.
So it's a bit of a time and motion study, old school speak. Right.
Yes.
Okay. Fantastic. Let's go back to Ecuador. Okay. Obviously, you put an announcement out recently with regards to the announcement from the ministry there. Clearly, your expectation is that things will resolve themselves, and it's just a process that you've got to go through. You're obliged to go through, and so you should as a miner. How do you get a sense of the timing of something like that? Because Ecuador has been again going through a few phases politically for the last 2-3 years, where there's, in terms of new mining projects coming through, it's a bit harder to understand when.
Yeah. First thing with Ecuador is starting to understand you can actually move ahead. Right. So for a while we were stalled. We really couldn't do anything. We wanted to get the investor protection agreement in place, and we wanted to understand what we had to do with a constitutional protective action, this court activity, so that we can start to move forward. So we got the EIA, a confirmation that is technically compliant, but now you have to do the public consultation and the indigenous consultation associated. So for us, the uncertainty is more around the understanding of exactly what we've got to do to move forward. Once we know what we've got to do, things become a lot easier. So I'm happy to say we've seen some resolution to that. Now, it's not going to be fully resolved until, of course, we've got the new government in place, so they haven't yet taken position. And of course, the president's still got to be elected, which is only going to happen in the middle of October. But I would see that what we're going to get is going to be a more business-friendly environment, regardless of whoever is a presidential candidate that should win. At the same time, there's greater clarity to the steps that we need to complete. And when I say we, it's more the ministry rather than us that has to complete that. It can be the Ministry of Environment, it can be the Ministry of Mines and Energy.
Right.
So to some extent, just bringing down those barriers which, have prevented us moving forward. Now we can see things moving forward. So in terms of timeline, so originally we were talking about the potential to build still in 2025, 2026. So I would say that slipped by about a year at the moment. I think the way we're looking at it, though, we're actually very excited about Čoka Rakita, and that's dominating a lot of our attention.
For sure.
5 hours away by road from our existing assets, with the potential to get the same value we did from Tepe with Čoka Rakita. That's hugely exciting for us. So to some extent, this is a non-linear delivery. We can't say it's going to be precisely these steps at precisely this time. But what we're doing is we're just making sure that we're ready at the time that the door opens and working with the communities to have the necessary support to realize that project.
Right. Okay. And I think it's better to say it doesn't really matter. And you've got a whole bunch of cash. Like nearly what, 500, where are we at? Cash?
542 million at the end of the last
right,
quarter.
Okay. It's not a single stranded asset in Ecuador, it's part of a portfolio. So I guess in that way, in a sense, it doesn't matter. But it is unvalued at the moment, which is that fair to say?
I think
so
that's
if it comes online, potentially a bump.
Yeah, absolutely.
Okay. Talking of bumps, little bumps, velocity. What's happening there? Because obviously they kind of started the year quite well, come off quite a bit. You've got a chunk of change in them. Is what they're doing, is it
You'd have to talk to Keith to get the full picture on this thing.
You're a shareholder.
But in terms of our relationship, what's happening with Velocity, of course, is we've got the JV with Iglica, which is 50 kilometers away from Tepe. So this is separate from Rosino, which has been the primary asset. And at the moment, we both see value in drilling that. We're providing the financing, and Velocity are providing the people in order to make that happen. So I would say Velocity at the moment is in that sort of phase where they're reshaping what they're doing. I believe they've brought in a new asset into the portfolio. We're working with them on Iglica. We're very aware of what's happening with Rosino. And other than that, you're going to have to ask Keith.
I knew this would happen. I've got to ask. But it also brings us onto the subject of there are some deals to be had out there. Some great stranded assets, some good assets that are stranded, either cash or the fact that it's too expensive for them to raise cash. So they're struggling on all fronts at the moment. Given the amount of cash you're sitting on, it buys you optionality in terms of not having to worry about things like Ecuador not coming through according to the plan. But you can obviously de-risk jurisdictionally elsewhere in the world. Is that something that's on the table at the moment?
We're constantly looking for the right opportunity. So having said that, it's sort of interesting. So people would look and say, hang on, there's a gap coming. Between the end of Tepe and the onset of your next project. So let's say that could be a year or two's gap. So what are you doing about that, and why don't you fill it? Well, the answer is what we're doing is we're looking at it from a point of view of not just any given year or any given opportunity. We're looking at what creates that NAP per share accretive opportunity. So having cash in this environment is a huge advantage. And there are some nice projects out there, but at the same time, we need to make sure that we're really able to realize the full value of that project. So we're quite disciplined about what we look at. What are we looking for? Ideally something that's close to or at production, or it's so exciting in terms of a future project that we want to invest in it right now in order to shape that project. So we're doing that, but at the same time, we've also had success in the last year with Čoka Rakita. And there's a lot still to explore there. So we've really just touched the tip of the iceberg with what was going on with Čoka Rakita. That was the first skarn we looked at. And we've got a significant portfolio to go after in that.
Right. So just in terms of that organic thing, which we talked about, how much have you allocated? I remember last time you spoke, it was like 30 million or so. Has that changed?
So we, if you go back 2 years ago, we're spending, say, $50 million just on exploration. Now we're actually mid-30s in terms of what we're spending. On top of that, in terms of project development, $20 to $25 million. So that would include the feasibility study. It would include what we're now doing, where we've been running a scoping study at the same time that we've been preparing the resource, just so we can understand what's the right way to really realize that value associated with Čoka Rakita. So Lemologa will now progress according to the way we can actually move things. So you're going to see some reduction in money there being spent, but you're going to see that increase in Čoka Rakita for sure.
So you're constantly thinking about this kind of return on capital invested component, as you must. And that's, I guess, the message for shareholders. Believe me, we're thinking hard about this. But I guess what I'm intrigued by is how do I view you as a company? Are you a $1.5 billion company? It's hard to keep telling the growth story. You have moved, through the phases this year, but are you a dividend story? Are you a growth story? Are you an acquisition company? Are you just setting yourselves up to be taken out by someone who needs to backfill their reserves? What are you?
I think we can build our organization with our internal capabilities. So we're not looking to be taken out to realize that ultimate value. Having said that, we're definitely undervalued at the moment if you look at the assets that we got. So one of the questions is, how do we move forward? And the answer is it's no one thing. So I believe we're good at executing on projects. The example of that was Tepe. I think we're good at executing on what we have in front of us. Tepe and Chelopech demonstrate on that. I think in the last year we've demonstrated more prowess in terms of finding the right type of asset. And where do we want to be? It's not so much about growth as it is about high margin. So if you have a look at what we've been able to do between Chelopech and Tepe, what we brought in with Choca Rakita and Loma Larga, Tierras Coloradas, these are high margin assets. So it's not growth for growth's sake. It's about how do we create a vehicle which is financially very attractive and able to return dividends, buy back in the event that that's the right thing to do with our money, or reinvest in our operations or exploration. So it's a question of moving that, but you've got to start that by a high margin business.
Okay. Yeah, I think, was it last year, 44 million in terms of buybacks and also dividends? Yeah. This year, aiming for something similar?
So we're on track for 100 million based on where we are so far.
That's stunning. Okay. Well, look, stay in touch. Let us know how you get on, because it seems to be going quite well. Enjoy those conversations next door, okay? And we will see you soon.